Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday. It's July the 12th, 2012, and we're going to be looking at a few charts today, all the U.S. markets and Toronto Stock Exchange, for those of you guys who are trading in Canada. Those are the charts that I'd be looking at for an actual buy opportunity maybe setting up right now. But there's some caveats to it, so I want to go into some detail here. The first thing we're going to do is look at the Dow Jones Industrial Average, and this is an actual situation here that's quite interesting. You've got this move to the downside here that we call that just fine, low point here. Bounce up here, taking out the previous high, making the potential for a reversal from a downtrend to an uptrend. We pull back here, we bounce off of this point and we move higher. A couple things here right off the bat. I can point out that this low point here is higher than this low point here. That would give you a series of higher highs and higher lows, and so people got really bullish about that. I held off on that. I didn't want to be a buyer of this because I don't see a lot of upside here. We also had a lot of major gaps form, not on this chart, but you'll see them in other charts. And I didn't want to buy into a gapped up situation, not with a gap that big. So I left that alone as well. Told you that gap would have to fill. Again, you can't see it on this chart. You'll see it in a moment. And now we've had that gap fill. We've had 6 consecutive days to the downside on this particular chart, and you've got the gap fill. But there are a couple things to point out here. Number one, this high point here is still higher than this high here. That's an important piece of the puzzle, because you know that even if you were going to break down, you still have to test that previous high. Until you've got a series of lower highs, then you don't really have a downtrend. So you would still have a test of that high. Also, the 6 consecutive days to the downside, that's above average. Typically, you're not going to see a market fall straight down. You get 5-6 days to the downside. That's normal. Then you get a move in the other direction. So again, 6 days to the downside, that calls for a move to the upside. However, that doesn't necessarily mean that, okay, now we're going to rally because we've had 6 days to the downside. If you look at this chart, you'll see that in the past, as you've seen before, you've had 1, 2, 3, 4, 5, 6 consecutive days to the downside, then 1 day to the upside, and another 6 to the downside. So just because you've got 6 days to the downside doesn't necessarily mean that a bull market is now going to be born. Okay, so don't get too bullish because you had so many days to the downside. But that is one of the things that is giving me courage to go be a buyer here, looking for a floor and a bounce. Another thing would be this hammer candlestick formation, followed after another one just before it. So these are all signals telling me look for a bounce here. So basically the chart is trending up. We have 6 consecutive days to the downside, calling for a move to the upside. You have 2 hammer candlestick formations calling for a move to the upside. You have earnings data coming out now. They're not all going to be bullish, but you're going to have some good news out there in the market. And so all these items, I can see why somebody would be a buyer here, and this is how I would trade that. Right now I've got it listed as an if and then scenario. Whenever it's a black arrow, I'm simply saying that I see the signals. If the following day gives me a higher high than we saw today, this high point right here gets taken out by even 1 penny, I would be a buyer of that with a stop set right here, 1 cent below today's low. And then as you continue to move higher, I would then advance my stop higher. And that's the same scenario I'm going to show you on all the other charts that I'm going to point out today. However, there's something else I want you to know. This overall move here, I don't see it as being sustainable. I've talked about this in the past. There's many different reasons, but the main thing I want to point out to you right now is the fact that you've got all this economic news that we've had over these past 6 days, and all of it has been bad. We've seen global slowdown from China, Europe, even in the U.S. Unemployment numbers are bad. All this news is not going away. I see as we'll actually be slowing down even more in the latter half of 2012 versus the earlier half. So these things are going to pull the market lower. With the news that we're talking about in Europe of the past, and their attempt again to fix the Greece-Spain issue and all that other stuff, it's fallen apart. And every time that stuff comes back up, it seems, at least from certain angles, to be worse than we have seen in the past. So the problems are just getting worse and worse. And as that develops, we are going to eventually break down. Now, here's where this gets tricky. What I'm saying here is this: you have a signal here showing that you have a move to the upside, but I don't want you to get married to that position. Don't assume that because you've got a signal telling you to look for a bounce that means there's a new rally coming. It can be a small bounce. You could simply move up here, test a previous high, fail, and start moving into a downtrend. So in this situation, I want you to be very cautious. If you're long, I'm still going to keep my VIX position open. I've not advanced the stop on that. I issued an alert about a week or so ago before we had this major sell-off here that I would be long the VIX because we had oversold conditions there. I would continue to acquire the VIX if we got a pullback there. Just different concept there, but you can watch the video I already put out there on the website at perfectstockalert.com regarding the VIX. But the main thing here is that this move here doesn't have to be big. And if you look at the longer term charts, which I'll show you later, the weekly candlesticks have already showing a sell signal, basically an inverted hammer or a shooting star formation like this. So we've already seen that on the longer term weekly candlestick formations, but we're not seeing it on the daily. And that again is another reason to say that we have not necessarily seen a peak in the daily charts. We could see a move to the upside here, then get a shooting star at many different levels here, or wherever. That would be, for me, the confirmation that I need for, yes, we have in fact peaked, but at this time, we're not seeing that on the daily chart, so I would take a long position here. If the following day gives me a higher high than today's high, I would trade it to the upside and continue to follow that with my stop until I saw the shooting star formation. Okay, this is a weekly chart of the Dow Jones Industrial Average going over the past couple of months. I could stretch it out further, but the main thing here is to show that you do have this shooting star formation here, another one here. They're not perfect in that they don't have, I mean, they have a small wick protruding from the bottom, but the logic behind the candlestick formation is the same. You had an open at this particular point, you rallied up, were unable to hold it, and you sold off. This gives you the same effect of a shooting star formation, basically meaning that buy pressure ran up and found sell pressure, and sell pressure was stronger than buy pressure. And then we get it again a couple weeks later, same situation. We open up here, we rally, we get sold off, and we close down here. Again, this is the same signal that we're talking about. This is a very nasty signal. We've seen it before here, open here, a rally up, sell off, and close low. That same sell signal there forming again on the weekly charts. And what typically happens when you see that and you don't see it on the daily chart, it just means it hasn't peaked yet on the daily chart. So you may see another test of the previous high, which makes sense because this high point here was taken out by this one here. So again, you can still see a test of a higher high or another test of a high, something like that, before you actually get to a point where you get a series of lower lows and lower highs. And once you've got that, then you've got it locked into place on both the weekly chart as well as the daily chart. Remember, when long-term chart and the short-term chart are both telling you the exact same thing, then you're really well timed and you've got a really good quality signal. Right now we're getting a little bit of conflicting signals. We've got the longer term chart telling us we've already peaked, and the shorter term chart tells us look for a bounce. What I think that bounce is a test of this previous high, and that which you already were about to see on the daily chart. You can shake it off. It's possible that can happen. So I don't want to just say I'm not going to buy into this thing because it's going to go up for a couple of days and then just sell off again. That's possible, but it's also possible that we'll get some kind of news, Fed or something like that, that will then turn this market and for a little bit of time drive it higher. So I want to play any angle that I have, and right now we do see a long trade on the daily chart, so I would take that. Looking now at the NASDAQ, you can see the same basic overall pattern that we talked about in the past. High point here, higher high here, no shooting star formation at the top here. Tells me that we haven't actually seen the actual peak on the daily chart here. So I'll be looking at this hammer candlestick formation here with a series of higher highs, giving me an opportunity to be a buyer. You'll notice again, when we talked about this big move right here, that told you I wouldn't buy this because this gap from this open here and this close here was too big. You were going to fill that gap. You've now pulled back and filled this gap. However, on this particular case, you've only had 1, 2, 3, 4, 5 consecutive days to the downside. That's a high end of average. We've not gotten really into above average conditions there. But again, we're starting to see a hammer candlestick formation or a doji, long leg doji formation that forms at bottoms as well and tops. So these things are all telling you could be a buyer here. Here again, I want to point out the rules of this buy. Only if the following day gives me a higher high than I saw today. So if the following day gives me 1 penny higher than that, I'd be a buyer with the stop set off of this low. However, if that doesn't happen and we were to gap down and start selling off, this trade right here tells you, this black arrow is telling you that I would not begin to touch that. I would just leave it alone and say, okay, that's not right. Continue to move on and stay on your long position on the VIX and don't get involved in the long position on the U.S. markets here. Looking now at the Russell 2000 Small Cap Index, same overall story. Again, you've got the series of higher highs, higher lows. It's trending up. That's fine. In this case here, no shooting star formation. You don't have to get them, but again, I prefer to see them. And in this particular case, again, this is our highest point. We've not yet given a series of lower series of highs, so you will have to test this high. Even if it is the all-time high, you'll still test it, and you would then be looking for a shooting star formation like you saw over here in this particular case. And so these are things that you could trade to the long side, looking for a move to go here and test the previous high. I would do that. If you get a higher high than today's high, higher than this point here, you can buy 1 cent. I then set a stop right here, 1 cent below that low, and continue to trade that stop loss limit higher as she continues to move higher. We also have this gap here that can fill. So there's things that can drive your move higher. However, I wouldn't get married to the position. Don't be surprised if you start to move to the upside. You get a couple of days, you get a shooting star, and I come out with a new video saying get short, close long position, so forth and so on. So that's just the main thing I want to drive your attention to right now. Also, again, this is our previous high point here before we broke down to this major move to lower. We've come up and tested that and fallen away from it. To test it again and fail to break out of here would just be that much more reason to get bearish. So again, don't get married to this position. Looking now at the SPX, or the S&P 500 Large Cap Index, which runs the inverse of the VIX. And this one, again, same overall signal. I would do the exact same thing. If the following day gives me a higher high than today, today's high was 1341.29. If I get 1 penny higher than that, I'd be a buyer with a stop set right here. That's how I trade that, looking for a test of this high point. Again, you could see this move even higher than this. You could see like this move up here and then a breakout if you got some kind of news, something like that. So I do want to get involved in that. But again, I also want to be make sure I'm clear on this, that it's potential for you to come up here, test this high, fail, and then begin to move lower. So I want to start advancing this stop loss limit. As soon as I start moving higher, I'll start advancing my stop to at least limit any risk. If I can get a no risk scenario on the trade, I would definitely take that. So be prepared to do that. Looking now at the Toronto Stock Exchange, or the TSX, this is the probably only chart other than the U.S. markets that I would be interested in taking a long position. And the main reason being the gap fill. A lot of your European market charts, you have not seen the same gap fill, not to the same degree. This situation here, we had a close here, and then we gapped up, and we backfilled a little bit of it, but we had this big hole right here, and then another one right here. These had to be filled before I would get involved. Now we've had a nice fill, hammer candlestick formation, higher series of highs, higher series of lows. The trend looks up. I would be a buyer here with a single penny higher than today's high. I would definitely buy that with a stop set right here. Look for a test of this previous high. Also, you've got this gap to fill here. So all these things tell me that I'd be looking for a move to the upside. You can make some money in these, and I would do that. Again, the rules are the same. Only if I get a higher high. If we continue to sell off, and then this whole potential trade there becomes defunct, and you wouldn't be messing with it. But right now, I'm looking at it saying if it's something that we definitely see potential in. You've got a lot of volatility here, and you can make some money in this trade. If there's anything in this video that you do not understand that I've discussed, from hammer candlestick formations or higher highs and lower highs, whatever, you can go to our free website at perfectstockalert.com. We have tons of videos there discussing and teaching every different aspect of what I'm talking about here, technical analysis, as well as different trading methods you can use with technical analysis. Our free website is perfectstockalert.com. Check it out. All we ask in return, please refer a friend. God bless. Take care, and maybe I'll see you in tomorrow's video, assuming that I have something new to report. All right. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.